While different opinions coming in there, Citi believes that India looks expensive, China is the better bet, and of course big domestic voices like Ramesh Damani believe that the Modi bull market will continue to roll on. Now the big story this evening, this is a CNBC TV 18 exclusive. In a significant departure from its notification issued in 2014, the Reserve Bank of India has proposed a relaxation to the rules on call and put options. In a letter written to the Finance Ministry, the Reserve Bank has asked the government for, and I quote, downside protection to foreign investors upon their exit. The move comes after Tata Sons moved the central bank in the Docomo matter. Nantha, you've been tracking this story. Now, this is a significant departure from the Reserve Bank's stated position, which basically had stated that there should be no assured or guaranteed returns to investors, and there must be a fair market value determined at which the transaction must indeed go through. And post the representation by the Tatas in the Docomo matter, the Reserve Bank has now written to the Finance Ministry seeking a relaxation of those rules.
That's right, Shri. In fact, this has been the stated position of the Reserve Bank for many years, which was formalized in a notification that had come out as recently as last year, where it had, pretty much banned assured returns, banned minimum guarantees for agreements entered into by Indian promoters and foreign investors. So therefore, a significant departure coming in, saying that there must be a protection of downside investments, which is, of course, a fancy terminology for an assured return. Now, this all coming after Tata Sons actually made a representation to the central bank asking if it could buy back entity Docomo's 124 crore odd shares at a predetermined rate of about 58 rupees a share. Interestingly, Tata Sons also writing in that letter that it had engaged PwC, and PwC has determined that the fair price value of each share is actually 23 rupees. Post that, as recently as 22nd of December, the Reserve Bank has written to the Finance Ministry saying larger than the assured return issue is to actually, honor fair commitments that have been made in contracts, is to protect downside investments, and doesn't just stop there. Normally, you perhaps would expect this to come in from the Finance Ministry, but the Reserve Bank actually writing to the Finance Ministry and saying, let's also keep in view that Japan has become a strategic investor partner of India, and there are large FDI inflows that are at stake. But this will not only be for Tata as an entity Docomo, Shirin. Let's be very clear about that. This is for the industry at large, because sources indicating that in that very communication, what the Reserve Bank has also written to the Finance Ministry is that this should be the new principle while determining exits, whether there are fair commitments that are in contracts, whether there is a downside investment that needs to be protected. So, of course, a significant departure. Good news for all the private equity players, foreign investors that want to exit. And once you have clarity on exits, you should have more foreign inflows.
Well, let's see if that does indeed happen and whether this gets the sanction of the Finance Ministry or not. But let's go across and speak with Vivek Gupta, the partner at BMR Advisors. Vivek, appreciate you joining us. This is, of course, a CNBC TV 18 exclusive story, and we are given to understand that the Reserve Bank has reached out to the Finance Ministry seeking the Finance Ministry's views on a possible relaxation as far as the Reserve Bank's notification pertaining to assured returns are concerned. And this representation comes on the back of a proposal made by the Tatas. What do you make of this? Because this is a significant departure from the Reserve Bank's stated position, is it not?
Well, absolutely it is. So if what you're saying and what you're breaking as news is true, and the Ministry of Finance actually gives a nod to the RBI for this, then it will certainly be very happy Lodi for capital flows. Until now, there have been two sets of views. One is that you should have either pure equity or pure debt. And equity should not be allowed to have any protection because then it starts behaving like debt. The second view has been that world over, hybrid form of capital is recognized. You can have instruments which have elements of fair market value linkage, but which have downside protection like debt. So the government, if it has moved, it would fundamentally be moving from view one, which it has consistently held over the last many years, to view two, which will be a very, very big move by the government. And I think what that will do is, at this point in time, we don't even realize the amount of money, the amount of contracts that private equity has had with Indian corporates, which would immediately come up and be seen in a completely different light, because these are matters which are in arbitration, where the primary defense of the Indian corporate is that Indian law restricts a payout based on downside protection, and that therefore exits can only be done at equity-based fair values. If that law were to be changed, I think it fundamentally transforms the relationship between capital providers and capital seekers in the Indian economy. It impacts a large number of current disputes. It impacts future investments in a big way because a hybrid capital class suddenly gets created, a class which has had to be created structurally through artificial instruments up until now, but which can now legitimately, directly be created in contracting structures between Indian corporates and foreign investors. So it will certainly be a very big move.
Vivek? You're saying it will be a very big move, and it is a happy lorry for investors at this point in time if this does indeed go through. But what do you believe has changed? Because these arguments were made in the past as well by both domestic as well as foreign investors. What do you believe has moved the needle as far as the Reserve Bank is concerned? Because again, I quote to you what the Reserve Bank is saying in its letter to the Finance Ministry. The larger issue here is of a fair commitment in the contracts in relation to an investment and a downside protection of an investment rather than an assured return. In view of this, we're inclined to accept the proposal, and in future, in all such cases, the similar principle shall be applied. What do you believe has changed the central bank's mind?
So that's hard to say. What I would say is two things. Number one, what we have been seeing over the last 2 to 3 years is gradually increasing levels of confidence with the Reserve Bank of India on this very issue. So for example, from a situation where amounts were capped at an RBI formula price to a situation where it became discounted cash flow. Finally, it was relaxed to internationally accepted pricing method in July of 2014. We've already seen the Reserve Bank make some moves. This move, of course, will be by far the most confident of the lot. Perhaps signals a new dispensation, perhaps signals a new confidence in the way that we would interact with investors. But we might be talking about all of this very soon. From what you tell me, this is only a letter from the RBI to the Department of Economic Affairs. The government might very well take a very different stand, consistent with the past kind of stand on this issue. So one has to wait and see what actually comes out. The one other thing that I would say is there are nuances to this too. So for example, the DEA might take a conservative stand and say, while we will allow downside protection, we will not allow assured returns. So what that would mean is, so for example, in the Tata Docomo case, what I understand is they're being paid 50 cents to the dollar. So to the extent of your capital, we will protect you, but we will not allow you to pay out any interest or any sort of return on that capital. So there are various nuances, there are various permutations, combinations in the way that this policy can finally come out. But I do think that at a macro level, this signals a much more confident Reserve Bank of India. And this is not the typical protect foreign exchange kind of view. And I have for long been in favor of a more capitalistic view, allowing various forms of capital. And to me, this will be net positive in the long term in terms of capital inflow.
Yeah, you're saying it will be net positive, but as you pointed out, and we're caveating that as well, this is a letter that the Reserve Bank has sent seeking comments from the Finance Ministry. We don't know the position that the Finance Ministry is going to take. But my final question to you in 10 seconds, what does your gut tell you? This is a government that is trying to woo investment, domestic as well as foreign. What does your gut tell you, Vivek? Are we likely to see, and there is the Japan angle that the Reserve Bank itself has thrown in, saying Japan is a strategic partner and hey, we will want to consider that when we take this decision. Do you believe that this is likely to go through?
I understand the Reserve Bank of India may mention it, but I won't overemphasize that angle, because whatever policy the government lays out has to be judicially defensible and principally applicable to investors from all jurisdictions. So that is one. Having said that, if there was ever an opportunity in terms of sentiment, in terms of foreign exchange reserve position, in terms of confidence that regulators should have, now is the opportunity. So I do believe that the government should make some sort of forward move in this direction. Even if they come up with downside protection and no assured return, etc., I still think it's a major step forward in the recognition of hybrid capital instruments. My gut is the government will go with it.
All right, Vivek, we'll have to leave it there. Appreciate you joining us. If we have any more information, we will get back to you. But thanks very much for joining us today. Nandara, what's the other corporate story?
The other big story, Shireen, coming in from Wipro Enterprises that's going private, and there are no plans to list the company. That's a clear message coming in from Wipro's founder, Azim Premji. And that's what he told shareholders at the company's extraordinary general meeting. However, shareholders have voted on the move, and CNBC TV 18 knows the company will get the approval it needs to go private. Purnima Murali now joining us with details on that. Purnima, just a short while back, we saw a new press statement that had come out from Wipro